Hey everyone, welcome back to Corporate Decoder, the place where we uncover the secrets hidden in plain sight in corporate filings. And let me tell you, has Cummins Inc. done a doozy of a filing? This time we're diving deep into their third quarter report for 2025, and buckle up because there are some serious numbers and some nail-biting moments in here. Let's kick things off with their overall financial performance, because that is what really moves the needle right now. Cummins Inc. posted net sales of $8.3 billion for the third quarter of 2025. This is a bit down from last year's $8.5 billion, which means they are seeing a slight dip in the overall amount of money coming in the door. Now, why is that happening? Well, the report points to a weaker demand in the on-highway commercial truck markets. That is a big chunk of their business. And when truck sales slow down, it impacts Cummins Inc. directly. And then for the first 9 months of the year, total sales came in at $25.1 billion, a dip from $25.7 billion last year. Looking closer at the segments, the components business specifically saw sales drop by 15% for the quarter and a staggering 14% for the 9-month period. This is mostly because of lower demand in North America's heavy duty and medium duty. Truck markets think of it like this: if fewer trucks are being built and sold, then fewer of the parts that go into those trucks are needed. And to add insult to injury, the whole Atmos Filtration Technologies Inc. divestiture really hit their 9-month numbers. The engine segment also took a hit, with sales down 11% for the quarter and 8% for the 9 months. Again, the culprit is that weaker demand in the heavy-duty and medium-duty truck markets globally, but it is not all bad news. The power systems segment is actually booming here. Sales jumped 18% for the quarter and a strong 19% for the 9-month period. This is largely thanks to higher demand in power generation markets, especially for things like data centers and commercial uses. And the distribution segment is also seeing growth, with sales up 7% for the quarter and 10% for the 9-month period. Strong power generation demand, especially in North America, but here is where things get really interesting. The Accession segment, which is all about their electrified power systems and hydrogen technologies, is facing some serious headwinds. For the 3 months ended the 30th of September 2025, their segment EBITDA, which is a measure of profitability before certain expenses like interest and taxes, was a negative $336 million. That is a massive drop from a negative $115 million last year. And for the 9-month period, things are even more grim. The EBITDA was a whopping negative $522 million compared to negative $333 million last year. The report directly mentions a $210 million goodwill impairment charge and a $30 million inventory write-down for this business. What does that mean? Basically, they are admitting that the value of the goodwill attached to their electrolyzer business, their hydrogen production tech, has dropped significantly, and they have a lot of inventory that they likely won't be able to sell at the price they paid. It's a tough sign for that new technology segment. Now, when we talk about profits, Cummins Inc. reported net income attributable to Cummins Inc. of $536 million for the third quarter of 2025. That is down from $809 million last year. And for the 9-month period, net income was $2.3 billion, down from a much higher $3.5 billion in the previous year. A big part of that 9-month drop is the absence of a massive $1.3 billion gain they got last year from selling off their stake in Atmos Filtration Technologies Inc. Yes, they made a lot of money from that sale, but without it, the numbers for this year looked less impressive. And then there is an unfavorable tax adjustment for passing the One Big Beautiful Bill Act that added to their tax expense. Looking at their cash flow statement is always a good idea to see how much actual cash is flowing in and out. For the first 9 months of 2025, Cummins Inc. generated a very healthy $2.1 billion from operations. That is a huge jump from just $65 million in the same period last year. The report chalks this up primarily to lower working capital requirements, but it also mentions that last year saw $1.9 billion in payments related to those settlement agreements for emissions issues. So while this year, this number looks great, it is partly because last year had a big cash outflow for something they hopefully won't have to repeat when it comes to debt. Cummins Inc. seems to be managing it reasonably well. Their total debt as a percentage of total capital is 36.8%, which is slightly down from 38.4%. At the end of last year, they also have quite a bit of cash and marketable securities on hand to cover their needs. On the investment front, they are putting a lot of money into their new Amplify Cell Technologies LLC joint venture. They've contributed $255 million so far and have committed to putting in another $551 million. This is for manufacturing battery cells for electric commercial vehicles. And while it is a big investment, the report notes that production isn't expected until 2028. So there is a long road ahead. Now let's talk about risks and the future outlook. Cummins Inc. is very upfront about the risks they face, and they list quite a few. The uncertain global trade environment with tariffs and geopolitical tensions is a big one. They are worried about how this could affect demand for their products and their supply chain. And then there are the regulatory challenges, especially with emission standards and the push towards Electrification, the Accession segment with its hydrogen and electric tech, is facing significant headwinds, including the goodwill impairment we talked about earlier. And get this, there is a potential $149 million hit if new EPA and NHTSA proposals remove the ability for companies to use emission credits for compliance. That is a significant number for them to potentially lose all. Once looking at the overall picture, Cummins Inc. is in an interesting spot. Their traditional businesses, like engines and components, are feeling the pinch from a slowing truck market, but their power systems and distribution segments are absolutely crushing it. The Accession segment is the wild card here. They are investing heavily in future technologies like hydrogen and LLC. Electric powertrains, but the market is clearly not moving as fast as they hoped, leading to those significant charges. It seems like they are pushing hard into these new areas, but facing a tough market reality. Overall, Cummins Inc. is a resilient company with strong established businesses, but they are navigating some serious headwinds in the truck market and grappling with the high cost and uncertain timeline of developing new green technologies. Their ability to manage these challenges, especially in the Accession segment, and adapt to changing global trade and regulatory landscapes will be key to their future success. So that is our deep dive into Cummins Inc.'s latest financial report. What do you think about their performance and their big bets on new technologies? Let us know your thoughts in the comments below if you found this analysis helpful. Please give this video a big thumbs up and subscribe for more corporate decoder breakdowns. And don't forget to join our Discord community linked in the description below for more in-depth chats about these filings. Thanks for watching, and see you in the next one.